I'm thinking about making a bit of a change in strategy. Usually, I'm always, if you follow me long enough, you know that I am a swing long term, medium term trader, if that makes any sense. So I like to buy stocks for 1 to 3 year max outlook. All right. So 1 to 3 year max outlook, which gives me, it works out really well. 90% or higher of everything that I pick will eventually be sold profitable within 3 years max, because I try to pick good companies. I try to pick good, pick good stocks. You can never time the bottom, but that's okay. I got that 1 to 3 year window, which gives me time to DCA during that time, and the stock moves up. It becomes green. It's an easy way to make money. So it's a super easy way. I've been doing this for years and I love it, and everything's perfect. But we are living in a time now where things have changed. I'm not going to go into too much details about the war and all that stuff. I'm not going to talk about it. But it's basically President Donald Trump. His tweets can move the markets, right? So it's a different time. In the past it wasn't like that. Presidents' tweets didn't really matter that much. But now it's just whatever President Trump says, that's what goes. That's what happens. Unfortunately or fortunately, that's just how it is. So I guess I have to change a little bit. I'm not completely abandoning the way I invest. There's no way I'm going to do that, because it doesn't. You always have to. You can't go 100% one way or the other. You have to be a hybrid, right? A mix, diversify your holdings, diversify your strategy, diversify your thinking. So, for example, Hertz, ticker symbol HTZ, which I been talking about for a long time, and I have 12,000 shares. I'm not going to let that go. I'm finally green. I'm up like $2,600 in Hertz right now, because my average is $4.85. But there was a time I was actually down $13,000. Do I care? No. I really don't care. So it's a 3-year hold for sure, up to 3 years. And I think it's going to work out. I'm going to keep that. But this YouTube video, everyone, is about a $3 stock that I believe is perfect for short term. That's it. I'm not going to take it too long. I'm not going to hold. I don't want to hold it too long. It's a good company, actually. Not bad. But because of, like I said, unpredictable politics, we're going to take it a different approach. So the approach that I am going to show you is this new approach that I have come up with. And so far, the past 10 days that this new approach has been implemented has given me 100% awesome, 100% accurate predictions. And they've all worked out perfectly fine. Does that mean that it's always going to be like that? No, there's no way. I'm not stupid. I know that. There's no such thing as 100% accuracy, but it works so far, so I'll stick with that. And I'm going to show you a $3 stock that this formula has come up with and told me, you know what, this $3 stock, Mike, you can get into it for short term and we'll do well. So we'll talk about that. But first, the S&P 500 recovered during the week. Happy Easter, by the way. Jeez, I should have said that from the beginning. So happy Easter to everyone. So during this Easter week, the S&P 500 recovered because there supposedly are hopes again in the markets that the Fed won't raise rates, and will just keep them as is. And you know what? I'll be glad if we can just keep them as is. Would be nice if we can lower the rates. I still think we should do that. People say, no, well, inflation. I still think we should lower the rates. We need now more than ever to give the economy a boost. We need to, because, the lower the rates go, the cheaper it is to borrow money. And I think now we need that, more than ever. But let's just keep the rates where they are. If the rates stay where they are for the rest of the year, it is bullish for the stock market. Not, a catalyst that would push the market really high, because at the end of the day, like I said, whatever Trump tweets, that's what moves the markets. But it does help. Let's keep those rates where they are. Let's not hike them. So the $3 stock, guys, that I want to focus on, and this strategy is go in, get out within 2 weeks. It's been working well. And it is CVGI is the new one. So I did a YouTube video about a week ago, and in that YouTube video I had talked about PayPal and I reviewed and all that. But in that video I also talked about our new quantitative tool. It's a tool that uses quant mathematics with ancient Greek mathematics to try and predict what would be a good stock to buy now and get in and out within, like, let's say 2 weeks. And it worked perfect. It really worked perfect. But now it's telling me that the new one is CVGI. Now, CVGI This alert came into our Discord when CVGI was, as you can see, $3.52. $3.52. Right now, CVGI in pre-market, 2 or 3 days after that alert came, is at $3.75. So it's working. Again, $3.52 to $3.75 may not seem a lot, like a lot, but for those seeking short-term gains, this is good. Now, I still think it's going to go much higher because there's something interesting about this company. That is that CVG outlines 2026 revenue target of up to $700 million as new EV programs ramp up amid market recovery. But I understand, EV recovery, I don't think so. I personally think that the EV recovery is not going to be well as long as this war is going on. But yeah, okay. It can still move upwards for the short term from the $3.52 that the alert came to $4, I think, easily. Because, guys, when we look at the market cap of the company, it's at $121 million. So currently, the market cap of this company, $121 million. But they said that 2026, they're going to make $700 million. You see that big difference, that gap, right? So I think that at least $4 the stock should go. And I think that the quantitative tool, which told us at $3.52 that it is a buy, I think it's right. And so far it's proven right. Like I said, it moved to $3.75. Management said the following. CEO James Ray highlighted strong year-over-year profitability improvement despite a challenging demand environment, especially in the North America Class 8 truck market. He noted during the quarter, we delivered an adjusted gross margin of 10.3%, up 190 basis points compared to last year. The continued year-over-year improvement in profitability was again driven by our focus on operational efficiency and improvement. If we focus on just what analysts say, and in a broad way, I guess they're not wrong. They are neutral in this stock, and they say that commercial vehicle group is downgraded to a hold due to persistent financial deterioration and macroeconomic uncertainty. I'd say the macroeconomic uncertainty most. But like I said, we're living in a year where President Trump decides pretty much where the market goes. So if he's going to decide where the market goes, and we have a volatility, we have a very, very volatile market, well, then maybe some of my strategies should shift towards taking advantage of the volatility and taking advantage of deep, mathematically, formulated technical analysis. And that's why my quant signal for CVGI, I think that it shows us 352. I think that it is was a good one so far. It's been good because it's moved up to 375, and I still think that the stock should go to 4. So it would be a winner. That's basically what I wanted to share. I think the CVGI can go to 4 minimum. This quant tool went live in our Discord for the first time last week. Let me show you some examples of what it showed last week and how they actually worked out within a few days. In the past week, only 4 or 5 stocks that it found that it felt were bullish, and all 5 of them went positive within 3 or 4 days after it posted that it was bullish. It's pretty cool. It's pretty amazing. It's a brand new tool. So, for example, it told us SVCO, which I don't know where it's trading currently now, but this was yesterday that I took the screenshot. It told us when it was at 689 that it was bullish, and then like 2 or 3 days later, it moved up to $7.25. Also for Baidu, when it was at $108, it told us that it was bullish, and then it moved up to $122 within 3 days. Jets at $24.60, as you can see here, it told us that it was bullish, and then 2 or 3 days later went to $25.50. BMI at $145, it told us it was bullish, and then 2 or 3 days later it goes up to $154. NDAC at $81, it told us it was bullish, and then it went to $84 2 or 3 days later. So it's pretty cool. It's amazing. So I like to use my tools, and when I use my tools properly, they work. So that's that. I'm going to end the video right here. Let me know what you think about CVGI. Can it go to $4 or $4.50? I think it can. It's working so far. I wish you all the best and take care.